Welcome back, investors. Jake here. In this video, let's give an update on one of my longest held positions in my Schwab accounts, and that would be HCI Group. They gave their fourth quarter earnings report this morning. It was good news. The stock is up over 10% today. And we'll talk about, am I buying more? Am I just holding? Do I plan to sell? But first, let's check in with the broader stock markets, and it looks like the S&P is up 2.8% today. If you remember on Monday, it was down almost 3%. However, from a technical standpoint, we're still just trading in this channel. So even though the market is green today, we haven't gotten to the previous local high. I think as soon as we get close to this downtrend line, signifying this whole channel, there will be another sell-off going into tomorrow, Friday, and next week. I explained that in my previous video. Check it out if you haven't seen it. But this stupid position, it was stupid, guys, that I took in HCI was gonna work if the whole IPO SPAC market hadn't collapsed. So my cost per share for HCI Group is $125 a share, and the current share price is $66. So I'm down 47%. There's a lot of people who bought recent IPOs or SPACs who are down 50, 60, 70, 80%. And what was happening with HCI is that HCI developed this insurtech company called TipTap, and they were going to spin it off. I was trying to buy shares of HCI in order to get IPO shares of TipTap just to unload them basically on the first day. So since all the other IPOs and SPACs have collapsed, HCI has been brought down with it, even though the fundamentals of the company are still really good. I want to show you guys here that the dividend yield is 2.42%. Anything above 2% will just attract, those dividend buyers out there. So I think we actually have hit the bottom for this stock, pending a series of hurricanes hitting the state of Florida. I don't see HCI Group going much lower than where it currently is. So the share price got as low as $58. It's currently $66. So it looks like $58, $59 is the bottom for this stock. Obviously, pending a natural disaster, it can always go lower. And HCI is a real estate holding company that does property and casualty, real estate, reinsurance, and insurtech. So let's check in, because this is the only thing that most investors in HCI right now care about. How is this insurtech company developing? Are they growing their revenue as they expand nationwide? So U.S. homeownership insurance is a massive opportunity. It's a $110 billion market. TipTap is, basically a brand new service, a brand new company trying to wedge its way in there. So it was developed over 4 years, launched in 2018, did a trial run just in the state of Florida. They secured private equity in order to expand nationwide, and this gives it tremendous revenue growth possibilities. So TipTap's revenue was $15 million in 2018, and they're projecting by Q3 of this year, their revenue could be $204 million. It's a 161 compound annual growth rate if you wanna have any stock in this number. So TipTap's expansion updates, they're currently licensed in these green states. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9 states it looks like. Or they're currently operating in 9 states, and then they're licensed in these dark blue ones. However, once again, they're trying to secure the funding in order to expand nationwide. This is what they were hoping to do by going IPO. IPO is basically a huge fundraising opportunity for a company. They needed that $2 billion they would have gotten from an IPO in order to basically unlock all the rest of these states. However, the current states that they're in, it appears they're doing pretty well. When we look at this full year reports, it looks like TipTap Insurance Company's gross premiums written grew from $42 million to 85 million year over year. I mean, that's pretty decent, guys. And their gross premiums earned grew 24 million to 56 million. So the number that is popping out that everyone sees is that HCI Group, the whole company, their revenue grew year over year by 59%. So you got to ask yourself, even though their earnings, technically they were negative this quarter on earnings per share, for a high growth company, what kind of premium or value or multiple, whatever you want to call it, are you going to give a company that's growing year over year by 59%? Now, this number is a little deceptive because for whatever reason, in the fourth quarter of last year, we're currently on macrotrends.net, HCI Group did $70 million in revenue, but then it jumped up huge in the first quarter of 2021. I don't know why the fourth quarter was so much lower, given that the previous quarter it was 104 million. I can't explain this, but you can obviously see for the longest time, going back to 2013, this was just a boring real estate holding company in Florida. But since they developed this InsurTech app, TipTap, their revenue has now dramatically increased. So the question now is, can they sustain this as they expand nationwide? So how do you value a company that's heavily reinvesting in growth? You look at their price to sales ratio. So their price to sales ratio is currently 1.42, which is basically where it's always been historically valued for just being a boring real estate company. So I think based on the fundamentals that HCI Group is still undervalued. When you look at their entire market cap for the entire company, it's 698 million. That's with their real estate holdings. But when you look at other insurtech companies that are publicly listed, like Lemonade, even though this has fallen huge, down 76% over the last year, the market cap is still basically double. It's double that of HCI Group at 1.35 billion. Same thing with Hippo. Hippo's market cap is about 1 billion. When you look at the price to sales ratios of these other insurtech companies, for Lemonade, they're given a price to sales ratio of 10. For Hippo, they're giving a price to sales ratio of 13. Meanwhile, little old HCI is just chugging along here with a price to sales ratio of 1. So the other publicly listed, recently new insurtech, disruptive, innovative insurance companies are getting basically 7, 8, 9 times the multiple that HCI Group, thus TipTap, is getting. So the question now is, do I want to add to my position? I have always been open to the idea of doubling up, buying another 100 shares. That would lower my cost basis, allow me to get out of this position sooner if I just want to keep holding it. Problem with HCI Group is we don't know when TipTap is going to go IPO. HCI Group is still committed to spinning off the company. So if you own HCI Group, you'll get shares in the new TipTap. And potentially this could happen next January. HCI wants to make sure they get top dollar for this IPO offering. And they're just going to wait until basically the market turns around and people aren't as jaded and cynical about IPOs and SPACs anymore. So the problem with HCI Group is its technicals. It's below all 4 of its major moving averages, and until it can get back above its 200-day moving average, I don't see this stock taking off. When you look how it performed over 2020 and 2021, it just stayed above its 20-day moving average, bouncing off of it, uptrending nicely. This was a fantastic stock to own in 2021 on the news of TipTap's IPO happening. But this year is going to be rough, guys. I don't see this going very lower, but I also don't see it just rocketing up back to $100 a share. As soon as it hits this 50, It's probably going to sell off as soon as it hits the the 100. It's going to sell off as soon as it hits the 200. It's going to sell off. So it's going to take over 6 months probably before the share price can get above its 200-day moving average. That actually is the best time to get back, buy more shares, and get involved in this stock. Once there's no moving averages causing resistance and selling pressure above the share price, that's when I think it'll skyrocket in anticipation once again for a TipTap IPO happening in 2023 or potentially 2024. So for now, I'm just going to keep holding my 100 shares of HCI. It's nice they're up 10% today, or a gain back about $600. Currently, this is already 8% of my accounts. I don't want to add to it at this time. If it, for some reason, skyrockets and takes off, I'll be happy to recoup my losses. But if not, I'm just going to keep holding it. Once again, I think with each quarterly earnings report, as long as we see revenue growth in TipTap as they expand nationwide, that's a good sign for this stock. I don't mind holding it for now. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.